See that? So here is our trading range from here to here. Okay, a bullish QM is here and a bearish QM is here. See that? A bearish QM is here. So why is price dropping back down into a discounted price? What's the other reason? To take out the internal range liquidity. What's the internal range liquidity? The swing lows that is resting inside of the trading range, right? That is the internal range liquidity. So what happened? Came back down, cleared the internal range liquidity. So when price clears that out, where are we expecting price to go next? External range. See that? Yeah, external range. What happened? Right into the targets. See that? That's how we take a range high and a range low, like this. Okay, this becomes your trading range. Can you understand that? This break, yeah, this break is the most high probable break, because now as soon as price goes above this, if you go to something like a 5 minute, for sure you can see breaks here. You can see that. For sure you can see breaks here. But what was your current trading range when price was right here? When price was right here, your current trading range was from here to here, right? Can you understand that? On a lower time frame, your trading range, yeah, is from here to here. So what if they decide to respect that and go back up? So if you take a sell here, you will get stopped out, right? That's the thing. That's why I told you on the same time frame. Only once you get this, you can confirm the trading range. Okay? Is it clear now? Okay, so let me delete this. So yeah, something like this is what you want to see. A swing low getting broken. Okay, a swing low getting broken. That is what confirms the trading range. Now let's say like this cannot be taken as a break of structure. Why? Never created a higher high. Never created a higher high. Okay. Yeah, might be an inducement on a lower time frame. You can buy it from here. Okay, no problem with that. Like this, like because what's a QM? A QM is something like this. A bearish QM is a higher highs, higher lows, higher highs, and a lower low, right? That is a bearish QM. So this is not a higher high, right? This is a lower high. It has to create a higher high and then break. Then this is your trading range. Okay, it makes sense, right? I hope it's clear. Yeah. Now, look, the thing is now the most common mistake people do is they will take this as the low, and as soon as price breaks out of this high, they will take this as the low, high of the trading range and draw their discount and premium from here, and then expect that then price will do something like this and it will go like this. Then they will be like, oh, this went from a, yeah. Yeah, that's the thing. Then you will not get the proper discount and premium prices. Then everyone will be like, oh, it went from a premium price. But no, it did not. It went from a discounted price of this trading range. See that? Price is fractal. Price is fractal. So what you can do is until the higher time frame external range liquidity is taken out, buy it from these areas. You can stack up entries using the lower time frame trading ranges. See, you had a break here. From here to here is the trading range. You could have bought it here. Then you had a break here. From here to here is the trading range. You could have bought it here. See that? So you had a break here. I told you after every single break of structure, a new trading range is made. So you had a break here. From here to here is the trading range. You could have bought it here. You had a break here to here, bought it here, bought it here. See that? That's the thing. Okay, you could just stack up entries using the lower time frame trading ranges. Okay, so is it clear? Yeah. Okay. Then let's say something like this is happening. Let's say price is moving back up and you had a bearish QM formed here before a new higher high is made. Okay, now this is when things get interesting. Okay, now what is your current trading range? Okay, that's the thing. If you know your proper trading range, okay, that is what's gonna give you the proper bias. Okay, now what is your major break of structure? It's here, right? And that break of structure is still bullish. So this little break of structure cannot say that GU is gonna be bearish. No, because your higher time frame break of structure is still a bullish one. Okay, it's still a bullish one. So look at this. The higher low is supposed to create a higher high, right? The higher low is supposed to create a higher high. So if this is the higher low, it has to create a higher high, right? It has to create a higher high. But what happened? Failed. Okay, this breakout structure is the indication that this low has failed to create a higher high. The low has failed. It's a failure swing. So our current trading is still from here to here. Okay, from here to here, not from here to here or from here to here. It is from here to here. See that? So
Mm-hmm.
this low has failed to create a higher high. So if it fails to create a higher high, this becomes a weak low.
Okay.
See that?
Yeah.
Then it becomes a weak low. Now you cannot expect confirmation entries from these areas. Why? It is a weak low. It is a weak low. So you can't buy from a weak low. You're going to take this as the liquidity or as the inducement now, and you're going to look for something below that. See that? This is the reason why people get stopped out. They will look for confirmation entries from these areas like this, and then price will stop you out on the confirmation entry itself.
Oh,
Price will do this. See that? You would have seen this happen. Okay, so that's the reason.
nice.
That's the reason. Okay, so basically you are trying to buy from a weak high. So you get stopped out. No wonder why you're getting stopped out. Okay, now if it's a weak, I'm sorry, it's a weak low, not a weak high. Okay, yeah. So if it's a weak low, it's obviously getting taken out, right? It's weak. It's weak. Okay, now why is this liquidity once again? Not only because it failed to create a higher high. Okay, if you look at this, it's a trend line.
Mm-hmm.
Okay, it's a trend line, and this might be, yeah, let's mark that out as liquidity, and this might be a broken resistance turning into support.
Okay.
See that?
So that's
This
the
might
fight between
even
the
be,
SNR liquidity.
yeah, this is internal. Okay, internal, still inside of this trading range. Okay, yeah, same thing. And see, from here to here, this might even be a Fibonacci retracement, like the 78.6. You know how famous these levels are, right? Golden ratio, 61.8. So everyone will be buying from these areas. And you know the classic smart money setup, right? A stop hunt, break of structure, RTO, the return to origin.
Yes.
You know that setup, right?
Yeah, yeah.
Stop hunt, break of structure, RTO. So this might even be that. See this? A stop hunt, breakout structure, RTO. People might think this is their return to origin, and then everyone will start chasing this move because no one wants to like miss out on a good move, right? Everyone will start chasing it. Okay, and see all of this liquidity getting built up. Okay, but we are gonna look for something below that. We're gonna look for something below that, like this. Okay, then they can do something like this because they know that everyone will be looking to buy from here, but it's weak. It's weak. Okay, so price can come back down, sweep all of this liquidity now into this point of interest. Okay, now what is your current trading range? It's from here to here, right? So where are we currently at? We are in an extremely discounted price, right? Extremely discounted price. Look at that retracement, like a 90% retracement almost. Okay, so that's an extremely discounted price. Okay, extremely discounted price. So when price comes into extreme levels, what happens? They do not want the retail traders to enter here because that is a very nice pricing, a VIP pricing for the institutions. Okay, because this low is protected too, right? A stop hunt and a breakout structure. So that's a strong low. It's protected. So look how far, look how close they came to that protected low. So they do not want to spend a lot of time here. So once they get here, that's a VIP pricing for them. They will quickly move out of the trading range. These moves will be very quick, like this. Okay, so then you have a breakout structure. This becomes your low, and this becomes your high. See that? So this is the new trading range. Can you understand that? Okay, so everything that happened here is, what's that? Internal structure. Do not get confused by this internal structure. Okay, so these are your proper swing points, here to here and here to here. So same stuff. What are you gonna do? Okay, look for discount and premium, wait for price to get into a discount, and wait for all of the drama to end by below that. That's it. Okay, and make sure you have a look for the inducements too. Okay, the inducements too. So can you understand this? Yeah, let me know.
Yeah.
I hope it's clear. Okay, so this is a bullish market, and then same thing in a bearish market. Now let's go to a bearish market. Okay, now price is in a downtrend. Okay, now the price is in a downtrend. So what are we gonna do? After every single break of structure, a new trading range will be created. So what is your current trading range from here to here? Okay, so like a normal market, what would you do? If you want to sell a product, you're going to wait for the price of that product to increase, right? Do you know that? You're going to wait for the price of that product to increase. So same thing here. You're going to wait until it goes into a premium price now. Okay, until it goes into a premium price, because it's like a normal market. Okay, into an expensive price. So that is anything above the equilibrium level. Okay, anything above the equilibrium level. Now it doesn't have to go into the 61.8 or 70.6 or 88.6 or nothing like that. If it just taps the equilibrium, that is enough. Okay, that is enough. So keep in mind, a high probable bearish point of interest will always come from the equilibrium or else anything above that. Okay, from the equilibrium or else anything above that. Okay, so we are not going to look for anything in a discounted price to sell from. Like for sure they can do this, but it will not last long. Okay, so you can take your intraday trades from these areas, no problem with that, but you can't hold it to these lows because you cannot swing a sell from a premium, from a discounted price. Okay, it has to always come from a premium price. Okay, so yeah, keep that in mind. And yeah, discount and premium and all of that stuff. So price can go up like this. Now,
But
what's the
most of the
other
time,
reason?
but most of the times when I see in lower time frames and also in
Okay.
higher time frames, most of the time price will not coming to those premium levels.
Okay, maybe you haven't marked it right because I'll show you. Because it always comes at least into the equilibrium. Okay, at least into the equilibrium, it will come. Okay, so I'll show you. I'll show you. Yeah, sometimes they can always do what they ever want to do. Okay, whatever they want to do, they will do it. Okay, but yeah, most of the time it will come into discount and premium prices. Okay, like 90% of the time it will. Okay, so I will show you examples. Don't worry. Okay, but yeah, first I'll explain this and then I will show you the examples because after this, let's get straight into charts. Okay, yeah, then it goes into a premium price. And what's the other reason they're going back up? Is to take out the swing highs, the internal range liquidity inside of this trading range. See that? So a bounce in a bearish market is a hunt for buy stops. Okay, so they go up, clears out the buy stops or as the internal range liquidity, and where will they go next? External range liquidity.
Yes.
Okay, from internal range to external range, or from the after taking out the buy stops, they will go after sell stops. Okay, they will go after sell stops. So that is what happens. That is what happens. Now, how do we confirm the new trade in range? Okay, so price has to do this. Okay, so let's say we had a strong high created, so price has to come back down, and once you get a break below this low right here, that is what confirms the high of the trade in range. Because why? We have a bullish QM. Okay, but how do we confirm the low? You have to get a bearish Quasimodo. I'm sorry, we have a bullish, a bearish Quasimodo here. Yeah, now you have to get a bullish Quasimodo for you to confirm the low, like this. See that?
Yeah.
Then this becomes your new trading range, discount and premium. Okay, once again, discount and premium, and wait for it to clear out the internal range liquidity. And now, since price is fractal, you can do something like this too. Now, let's say price is falling back down. Let's say you had a QM here. What are you going to wait for? On a lower time frame, you can use this as the trading range, discount and premium. Wait for the drama to end, buy below the inducement, somewhere around here. Where are you holding it into? Into the internal range
Into the higher
liquidity.
time frame.
Yeah, exactly. Exactly. Okay, the equilibrium is your safest target, right? Because they can just tap the equilibrium and then melt. That can happen. So keep in mind the equilibrium level is always your target. Okay, that is always your target, or else you can just hold it into this internal range liquidity. So let's say price is going up. So you can do this ping pong stuff. And after clearing out the internal range liquidity, when this counter trend gets broken, okay, a bearish QM is formed. Wait for this, sell above that, and yeah, it will drop. See that?
Okay.
So then you can do this ping pong stuff up and down if you know the proper trading range. And remember, price is fractal. Okay, price is fractal. So you can sell it from here to here. You can buy it from here to here. Okay, once again, you can buy it from here to here. You can sell it from here to here. All of that stuff is possible. Okay, only thing you have to do is mark out the proper trading range. Okay, so I'll show you. I'll show you how to do that. So can you understand this? Yeah.
Yeah.
Mm, okay. Let me refresh this. Yeah, I think because I have the $5 trading view premium thing, it's the free trial. That's why it's laggy. Okay.
Okay.
So now let's see what's happening. Okay, let's say price is coming back down like this. Let's say we had a bullish QM formed before a new lower low is created. Okay, so what's your trading range now? Now you can't use from here to here as the trading range. No, because why? It's weak now, right? It is weak. It is weak. Like for sure, you might get reactions. Okay, because why? We have liquidity being fed into that point of interest. So you might get reactions, but it's not gonna hold, it's not gonna last long. Okay, it is not going to last long because why? It's weak, right? It is weak. Now let's now, if this is a 4 hour time frame, for sure you can take intraday trades from here. Okay, for sure you can take intraday trades, but keep in mind you can't swing them because you're trying to sell from a weak high. Okay, why is it weak? It never created a lower low. It broke. It failed to create a lower low. This is the indication that it has failed to create a lower low. Can you understand that? Okay, so if it fails, this will turn into a weak high. Okay, this will turn into a weak high. So obviously, if it's a weak high, it is liquidity. It's getting taken out. Now, why is it liquidity? Not only because it failed to create a lower low. Okay, these trend lines, okay, support turning into resistance, Fibonacci levels, okay, or is this top hand breakout structure RTO? Everyone will be selling this, but we're going to wait for this, okay, something like that. All of that liquidity, these trend lines forming, all of that. Look at how much of liquidity. Okay, a lot of liquidity is getting built up. So what we are going to do is we're going to look for something above that. Okay, we're not going to look for confirmation entries from here. Look for a point of interest above that because it is feeding liquidity into this. Then price can come up, sweep this liquidity, and when price comes here, it's a VIP pricing for them, like I told you. Okay, because that's an extremely premium price, right? Extremely premium price of this trading range. So when they come here, they do not want the retail traders to enter the market with them. So these moves will be very quick. They will quickly move out of the trading range like that. Okay, so once you get this break, okay, so you have a new trading range from here to here now. Okay, so same stuff, discount and premium, wait for it to end. You can even hedge it until it goes there. Okay, and you, or else you can wait until it gets here and then sell it. Okay, so this is pretty much what happens with market structure. Okay, do not get confused with them because this is internal structure. Like price can spend like days and weeks inside of a trading range like this. Inside of this trading range, they can spend like, yeah, even a month inside of this trading range. But once it gets into the extremes, it drops. Okay, this is what happens. So you have to know your proper trading range. Can you understand that? Yeah.
Yeah, I got it.
Okay, then let's get into the charts. Now, what the fuck is? Oh, okay, I have I have internet. Okay. Now, once we no no not once we now as a smart money trader, okay, as an intraday trader, what's the highest time frame that you would look at? Like personally, what's the highest time frame you would look at?
Uh, Firstly, I will go to the 4 hour chart and mark the
Okay.
strong highs and weak lows and those
Oh,
kinds of stuffs. And I will
okay.
go to that's my maximum highest time frame.
That's the highest time frame.
Yeah.
Okay, but that's okay for intraday trades. That's gonna be fine. Okay, but you have to always start with the higher time frames. Now, when I say higher time frames, at least the weekly. Okay, at least the weekly or the daily. Now, for me personally, I will always start from the weekly time frame. Okay, I will always start from the weekly time frame. Why would I do that? Because like now when I say the weekly, I don't care about all of this. I don't care if the weekly is creating lower highs or lower lows. I don't care because I'm not a swing trader, right? I don't want a projection for the next couple of years or anything. Like price might never get into these areas. Who knows? Who knows? Okay, might never get there. All I want to see is the current price action on the weekly. Okay, like I'm not even gonna zoom out like this. Okay, no, this is all I want to see. This is all I want to see. Now, let me show you very clear examples. Okay, let me show you how to use all of the concepts that I taught you right now. So let's say we were here. Okay, now let's say we were here. First thing, what do I want to see on the weekly time frame? I want to see what my major bias is. So on the weekly, my major breakout structure is still a bearish one, right? See that? It is still a a bearish break of structure. So which means the weekly is still bearish, right? Simple. The weekly is still bearish because the major break of structure was a bearish one. And then what do I want to see? Where are we currently at? We are inside of a weekly supply or is a weekly order block. See that? We are inside of that. So what can I expect the next week? We can expect sells until at least this imbalance get filled. See that? This is all I want to see because if you get a bias for one single weekly candle, just one candle, you have a bias for the whole week. See that? You have a bias for the whole week. Okay, so next week we can expect until, yeah, we can expect a sell at least until this imbalance get filled, right? Because it's coming from a higher time frame point of interest. Now, this is all I want to see. This is all I want to see. Okay, this is all I want to see on the weekly. Then go to a daily. Then I go to the daily, and on the daily, what am I going to do? I'm going to mark out my trade-in range. Okay, the trade-in range on the daily. I'm going to mark out the trade-in range on the daily. Now, yeah, I'll delete this for a while, but keep in mind that this was a weekly point of interest. Okay, a weekly point of interest. Now, on the daily, what am I going to do? I'm going to mark out my strong high. So here it is. It is a strong high. Why? Took out all of this liquidity,
Okay, this is a bearish
and
QM, right?
yeah, that's a bearish QM. See this? A bearish QM. Okay, bearish QM. So price has taken out all of that liquidity, and it has, yeah, a minor structure was broken here. Right here was where the minor structure got broken, and here we have the major structure broken. See that? The major structure was broken here. So this is a bearish QM, right? A strong high, never tested yet. Mark that out. Now, how do we know the strong high has created a weak low? What do we want to see? A bullish QM, right? A bullish QM. So here we have that.
Yes.
So here we have the break right here. Right here is where we got the break. Now, this is not a break of structure. Okay, why? Because did this create a lower low? No, right?
No.
Never created a lower low. Okay, so that cannot be taken as the break. This is where price broke structure. So we can use this as the high and this as the low. Okay, is it clear? Is it clear? Okay, because yeah, the chart work must be clear. Okay, so I'll try to make it as simple as possible. So this is my trading range from here to here. Okay, so this we have this break, and if we look for discount and premium prices, where are we currently at? Premium price, right? Inside of a premium price, and we are inside of a daily point of interest, inside of a daily strong high. See that? Inside of a daily strong high, inside of a premium price, inside of a weekly bearish order block, which means it has a huge potential to the downside, right? We can expect sales now. Okay, we can expect sales this week. Okay, we can expect sales this week. Then I'll go to the 4 hour. I have all of this marked. Yeah, so let me mark this out properly. Okay, we have a strong high here, another one here. Okay, like this. All right, so we have all of these areas marked. Now what do I want to see on the daily? Okay, what am I gonna do on the daily? Oh yeah, this is the 4 hour. What am I gonna do on the 4 hour? Yeah, what's that?
This is the 4 hour chart.
Yeah, this is the 4 hour. Okay,
Okay,
so
yeah.
on the 4 hour, what I'm gonna do is I'm gonna mark out my obstacles. Okay, now what do I mean by obstacles? Okay, you know what obstacles are, right? Like the things that are like blocking the way. Okay, now if I'm taking a sell here, it will not directly fall here. It will obviously pull back up. It will pull back up. Okay, so I'm gonna mark out the zones where I can expect pullbacks from. Now, where will the pullbacks come from? From unmitigated strong lows. See that? From the unmitigated strong lows, that is where the pullbacks will come from. Okay, that is where the pullbacks will come from. So first of all, let me talk about this low right here. Now this was a strong high, right? Why was it strong? It took out liquidity and it has broken structure.
Yes.
See that? So that is a strong high, a bullish Q, a bearish QM.
yeah,
See that? That's a bearish QM. So then what happened? Look how hard they tried to break above that bullish Q, the bearish QM. Now, this is my point of interest, okay? Because see, these were the consecutive up candles that took out this liquidity. This did nothing. These were the candles. See that? Okay, so your focus must go into the candles that took out the liquidity. Okay, because if it's an order block, it has to make sense, right? It has to make sense. So this is the order block I'm looking at. This is the point of interest. See how hard they tried.
yes,
Okay, they like for days and days they were trying hard to break out of that. Yeah, see, took them 10 days to break above that strong high, but eventually they broke out of that, right? They broke out of the strong high. So to break out of this strong high, where did the low originate from? It's here, right?
yeah,
So if this low broke above this high, this is a strong low, right? That's a strong low,
yeah,
and it has never been tested yet. Okay, never been tested yet. So mark that order block out. None of these, I'm not looking at this, I'm looking at this, the last push down before the push up.
okay,
Mark that out. Okay, so we have one area marked out. Okay, and then let's see another area. So we have a strong low here, right? We have a strong low here. Why?
yeah,
Took out liquidity. Okay, it has taken out liquidity and it has broken structure.
yes,
And now what do we want to see? Now this is a what's that? A bullish QM, right?
yes,
That's a bullish QM. So what do we want to see? From the time that the bullish QM is created, we want to see a bearish QM, right? That is what we want to see. That is what we want to see. Like, yeah. Now look at this. All of the lows were protected, swing lows, swing lows, swing lows, until here it was broken. Now, if you use a line chart, you can see it properly. See that? Ignore the wicks. Ignore the wicks. See that? Can you see that? Here we have a bearish QM, a very clear bearish QM. See that?
yes,
A very, very clear bearish QM. Okay, so which means this is a strong low, right? This is a strong low and it has not been tested yet. It has not been tested yet. So this area, we can expect a pullback. Okay, we can expect a pullback from this area. Okay, so now where can we expect the pullback from? Now, I don't care about this order block. What is the candle that took this liquidity out? What's the candle? It's this, right? See
yes,
that?
yes.
This was the candle that took the liquidity out. So mark
But
that
that
out.
candle got
See that?
mitigated, right?
I'm sorry?
But that candle got mitigated.
This thing right here, not yet. Okay, this cannot be counted as a proper mitigation. It has to,
Yeah,
like, after creating, now this is what we want to see. This is the strong low, right? Now don't look at the candle, don't look at the, don't do not look at the candle. Is this bullish QM mitigated? No, right?
no, no, no.
Is this bullish QM mitigated? That's what you want to see.
We are looking it as
Is
a
it
whole,
mitigated?
right?
I'm sorry.
We are looking it as a whole, the Quasimodo
Yeah,
chart.
as a whole. Exactly. We're
Okay.
going to look at that whole thing as a whole. You know,
I thought
we're
like
not
we
going
are
to look
looking
at
at
this.
candles
Okay.
only.
Yeah, we're not going to look at focus on this candle. We're going to look at the whole Quasimodo.
Okay,
Okay,
great.
we're going to look at the whole Quasimodo. We're going to focus on the strong low. Okay, the strong low that has not been tested yet. But why is that strong low? Yeah, what is the most significant part of that strong low? It's this candle, right? The candle that took out the liquidity. So that is the reason why we are looking at that. Okay, so we have that. And one more area we have, and it is already testing that. See this? Stop hunt
Mhm.
and a break of structure. Okay, so this could be used as an inducement into this area. See, this was the doji that took the liquidity out.
Yes.
Okay, so yeah, I think it tapped into that, never came into the body though. Yeah, it came very close. But yeah, now look at this. Can you use this order block? No. Why? Did it take out liquidity? No. Did it take out any liquidity? No.
Yes.
On this time frame, did it take out any swing low? Not, no, nothing. But it only broke structure. So what did I tell you about a strong low? It has to do a manipulation and then break structure, right? But yeah, this did break structure, but did it take out liquidity? No. So is it high probable? No. That's it. Okay. So yeah, so we have all of these areas marked. Okay, we have all of these areas marked. Now, when price gets here, what do you want to see? A QM. When price gets here, what do you want to see? A QM. Okay, so if the QMs are is now, yeah, I'm referring to it as a QM, so that's easy for you, right? It's simple, I guess. Okay, so yeah, now when price gets here, if you do not see this, okay, simple, you're not going to take the trade. You're not going to take the trade. Okay, you're going to, like, it will just go. All you have to do is just delete the zone. Like, that's not going to lose money, right? You're not going to lose money with that.
Yeah.
Okay, and yeah, yeah, when price gets here, once again, what do you want to see? That's it. If you do not get that, it will just keep on going. So you're not going to lose money. Okay, so simple, simple. So you can have these areas marked, have these areas marked out. Okay, we got them marked out. And then now let's go to a lower time frame. So we have everything marked, range marked, obstacles marked. Even this obstacle, yeah, currently the obstacle is getting played out. Now let's go to a lower time frame. Let's see how we could stack up the entries. Okay, let's see how we could get some trades. Okay, first thing I'll show you what how the trading ranges are playing out. Okay, we have all of this stuff. Yeah, like even this buy, where did it come from? Okay, I hope you saw that. If you mark out the Asian range, like, yeah, I got this buy, that's why I remember this. Asia starts at 2:30, ends at 9:30 IST. Okay, that's Indian Standard Time. This is the Asian range. Okay, where did this move come into? Right into the midline.
Okay.
See that? Right into the midline, and look at the move. Bam, shoots up. So I got my entry from this wick right here. See that? Where did it come
In
into?
this
A
case,
sniper
why
entry,
you
right?
took that wick
A
as like
sniper entry, and it
POI?
goes. See that? Can you understand that about the Asian midline? Okay, very powerful. We had liquidity resting right above that, swept that liquidity, and it shoots up.
Okay.
Okay, and it shoots
I
up.
have one doubt. Why did you took this
Okay,
wick as a POI in this case?
in this week,
This
okay, I
week.
think, yeah, now on FXCM, okay, on FXCM, like, it
Okay.
was very clear. Okay, it was very clear. The midline was lining up right in this area. Okay, right in this area, and you can see that, right? The imbalance was above the 50%. The wick was where the 50% was. See that? So I'm not going to use this. I'm going to use the one that is below that. Simple. Can you understand that? Okay, Asian midline. So the if it taps into the Asian midline, like, if I'm entering off the imbalance, I'll get stopped out, right? Can you see that? If it wants to tap into the imbalance, I'll get stopped out because the midline was right here. See that? Can you understand that? I hope it's clear. Okay, so this is where like, you could have even use this whole area, but I refined it to the wick right here. Can you understand that? Yeah.
Yeah.
Okay, because if it wants to tap into the midline, if you entered off the imbalance, you're getting stopped out. Okay, so it's always better to use it this way there. Okay, see now, see how things are different, right? In that previous example, somewhere around here, I told you we're going to use the imbalance. Okay, we're going to use the imbalance. Okay, but yeah, in here, why are we using this? Oh shit, I have to refresh this. Why are we using this? Because the Asian midline was right below that. Okay, so there are chances of us getting stopped out if we use that thing. Can you understand that? Okay, I hope it's clear.
Yeah.
Yeah. Okay, so then what happened? Now we are inside of the daily point of interest. What did price do? Took out liquidity, broke structure. We have a QM, right? Inside of the daily point of interest. Okay, so we can mark out that strong high. Let's use some different color, maybe. Yeah. Okay, we can mark out that strong high. Now, how do we know this strong high has created a weak low? First thing, it has to break below this. Okay, done. And then you have to get a break of a swing high, right? You have to get a break of a swing high. So not this, this. Can you see that? Like, if you use the line chart,
Okay.
here we
This.
have the QM. Yeah, here we have the QM. Not this, not this, it's this.
Yeah.
See that? The QM. Okay, so we have a break of a swing high right here. So your trading range is from here to here. Okay, so
Yeah.
now you know what to do. Now you know what to do. Discount and premium. Okay, let's mark out the trading range first, like this. Okay, now look at all of this. All of these were tradable too. Okay, because why? We had